One stock that's been on my watch list for a while is Shopify, and now we are finally seeing the stock on a little bit of a dip as it has fallen by over 20% in the last month. However, this drop in the stock price doesn't appear to have anything to do with the fundamentals of the company degrading. So in today's video, we're going to take a look at these fundamentals, their top line and bottom line numbers for Shopify. We're also going to go over the company's net income and project out how this number could change over the next couple of years and the corresponding stock price that could result from those changes in EPS. Before we dive into Shopify, thank you guys so much for the continued support. I really appreciate all the comments, likes, and engagement that you've given the channel in the last couple of months. If you want to support the channel, the best way to do so is simply by dropping a like down below. And if you want to see more videos like this one, make sure to subscribe. And on this channel, we take a lot of pride in being transparent about the moves that we are making in the market. This is the YouTube portfolio, and it's currently sitting at a value of $60,465.42. Within the YouTube portfolio, we have Alibaba, Google, Apple, Microsoft, Palantir, PayPal, SoFi, Super Microcomputer, and Visa. This is just the YouTube portfolio. I do have a larger portfolio that I manage that has a lot of the same positions as you're seeing here. One of those is actually Apple. And what I decided this weekend is I am going to reduce my Apple shares in my main portfolio by about 50%. And really the reason for this comes down to valuation and how much growth they have moving forward. I think Apple over the next 5 to 10 years will likely trade in line with the market. It's already a massive market cap. I don't see them innovating very quickly, especially when it comes to AI. There hasn't been a whole lot of talk around how Apple is going to integrate AI and actually utilize it more effectively. A lot of other companies like Amazon, Microsoft, the other big dogs are looking at AI as a big opportunity, and you don't really see that coming from Apple. But keep in mind, that is all just my opinion. Make sure you do your own research before making a decision around your portfolio. Another stock that I've talked about selling out of is SCHD. I've actually come up with a date now as to when I plan to sell out of this ETF. Right now, you'll just have to stay tuned for a little bit longer to see how I plan to make that decision. I also hold VYM and a decent cash position of around $11,000. One stock that isn't in any of my portfolios is Shopify. However, it has been sitting on my watch list for almost a year now, and the stock has just continued to run up over that time period. However, today we are seeing it on a little bit of a dip, down around 22% from its recent highs. These recent highs, however, are not all-time highs. Actually, back in 2021, when a lot of these stocks that were a little bit more speculative, especially online companies like Shopify, were getting a lot of attention, the stock price hit almost $170 per share. From that point though, the stock ran down by almost 85% to a price of around $26 per share. And really the main reason for this drop in the stock price had to do with a shift in Shopify's business. They started focusing on trying to open up warehouses to almost compete directly with Amazon and their business model. This was going to support the vendors that use their Shopify sites. They were planning to use these warehouses to help them ship their goods. However, this did not work out very well, and they ended up getting out of this business. And they have shifted their business back to mainly being focused on providing stores with e-commerce platforms. That is what Shopify does. Right now, they hold 30% market share in this market, with the next biggest player being Wix and then Squarespace. In my opinion, I wouldn't be surprised if over the next 5 to 10 years, we see some consolidation in this market. What I mean by that is I wouldn't be surprised if Wix, Shopify, and Squarespace end up acquiring some of these smaller companies to expand their market share, and this market turns into maybe 2 to 3 players. This is very common to happen over time, where a lot of the players start to consolidate and you see the market mainly being 1 to 2 players. The search engine market is a good example of that. However, it hasn't been around for a very long period of time. A better example would even be railroads. If you think about railroads, you have Canadian Pacific and Union Pacific Railroad. Those are the 2 players that are left around after numerous different railroad companies have existed over the years. And really the reason you start seeing this consolidation is as there are too many players in the market, it actually ends up hurting companies' top and bottom line numbers. Shopify reported their numbers back on February 11th, and they came through with EPS of 44 cents and revenue of $2.81 billion, both beating analyst expectations. markets. And with Shopify being in a newer market, it's been easy for them to grow their top line numbers. We can see that they have consistently over the last 2 years been able to grow their revenue by over 20%. And they are now sitting at a trailing 12-month revenue of $8.88 billion. If we go back just 5 years ago, they were only bringing in around $1.5 billion of revenue. The problem for companies that are in markets where there are lots of competition, as well as relatively new markets, is often profitability. We can see that Shopify back in 2021, where a lot of businesses were having to convert to online, we're seeing their profitability increase massively. They went up to $2.68 of trailing 12-month EPS. However, as Shopify started focusing on their warehouse business, they had to spend tons of CapEx to start building out those warehouses. That ultimately led to a trailing 12-month EPS at one point of negative $2.73. And we are now just starting to see them get back to profitability, sitting at a trailing 12-month EPS of $1.55 most recently. In a minute or so, we are going to take a look at net income and project it out over the next couple of years. So I want you to take a look at where it's trended over the last year. Their trailing 12-month net income is sitting at $2.019 billion. And that's also including a quarter of negative net income and a quarter where they experienced very small net income at the start of 2024. And another thing that's important for these projections that we're going to do here in a minute or so are their shares outstanding. We can see that over the last couple of years, they did see a dramatic increase in their shares outstanding into 2021. However, since that time period, it's been relatively flat around 1.302 billion shares. And the final thing that's important for these calculations is going to be Shopify's valuation. They currently have a PE ratio of 64.94. To me, I think what's reasonable for this company is anywhere between a 50 and a 60 PE ratio. With how fast they are growing their top line numbers and even the bottom line growth that we've seen over the last couple of quarters, I think Shopify can easily justify this valuation. So what we can actually do with those numbers is we can put in the 2024 numbers of $2.02 billion of net income and 1.3 billion shares outstanding. That results in an EPS number of $1.55. And if you don't believe my math, you can even come back here on macro trends and you can see that for the trailing 12-month basis, they have put up $1.55 of EPS. However, those are just current state numbers. We want to make projections of where this stock is headed in the future. I am going to assume 25% net income growth in 2025. That results in net income of $2.52 billion, and I am going to keep shares outstanding relatively flat around 1.3. That results in EPS of $1.94. If we want to get an idea of if our estimate is actually realistic or not, we can take a look at Yahoo Finance. On Yahoo Finance, there are 39 analysts covering the stock for 2025, and they have an average EPS estimate of $1.50 compared to $1.26 of EPS in 2024. Remember that we actually showed in terms of GAAP EPS that they put up $1.55. So this is non-GAAP EPS. That means there's about a 30-cent difference between the two. So this number is actually closer to $1.80. So again, 25% growth is a little bit more aggressive than analysts on Yahoo Finance, but that results in this $1.94 of EPS. If we assume a fair valuation is between 50 and 60 for a forward P ratio, that results in a stock price anywhere from $96 to $116 per share. That means right now at $100 per share, the stock is basically trading at a fair valuation. So we are a little bit higher than the average EPS estimate in terms of our net income growth that we're projecting over the next couple of years. That is also true for 2026 because they have an average EPS estimate of $1.90. If we add 30 cents onto this, that would be around $2.20 of EPS. And for 2026, what I have built in is 30% net income growth. That results in an EPS number of $2.52. If we look at forward valuations again between a 50 and a 60, that would result in a price anywhere from $126 to $151 per share. And in 2026, I have net income growth accelerating even further to 35% growth year over year. That results in EPS of $3.40, which could be price targets anywhere from $170 per share to $204 per share based off 50 to 60 PE ratios. Even if you decrease net income growth to only 15% in 2025, 2026, and 2027, you still get decent stock returns over the next couple of years of around 20%. The only concern that comes up with this dropping of growth is whether valuation could drop with it. Because if you see valuation drop into the 40s, then you will not see these solid returns. You will actually see the stock price likely fall. For me, looking at Shopify, I'd like to see the stock price fall down to around $75 per share. That to me is where the stock starts to get interesting and starts to be a reasonable position to build out. You want some margin of safety when you're entering into a position, and I think $75 gives you a little bit of that over the next couple of years. If the stock were to drop down into the $50 range, that to me is where it's a buy, and buy very aggressively. But keep in mind, that is all just my opinion. Make sure you do your own research and don't buy a stock just because some random guy on YouTube talked about it. Thank you so much for watching. If you enjoyed the video, drop a like down below and subscribe for more videos like this one. And as always, have a wonderful rest of your day. And for the joke of the day, where is one place you should never take your dog? Check the comments down below for the answer. Thanks for watching.